Let's dive deeper into the action with our markets reporters, equities, bonds, currencies, commodities. Taylor, what are you watching?
I'm taking a look at shares of Square. Now, they're falling more than 2%, and this is after an analyst over at Nomura came out and said that they're wondering if the cost of their spending is paying off into customer loyalty. And he's saying that in this case, it is not, that their heavy spending is failing to buy a lot of that loyalty. He looked at a measure of cost for each Cash App download. It has more than doubled since 2017. And then he compares that to PayPal's Venmo, for example, which has a very highly engaged customer base. This is all, of course, according to Nomura. So what that means is dragging down all the other payments companies like Visa, MasterCard, Amex, for example. Interestingly enough, Visa also announced a partnership over with Tencent, saying that they're working on allowing Visa card holders to use their Visa card in China at millions of places where also WeChat Pay is accepted. So instead of having to rely on cash, they can use their Visa card. It looks like, at least for today, investors not thrilled about that news either. Renita?
Taylor, I'm taking a look at Shake Shack shares, try to say that 3 times, which are plummeting 20% today after an earnings miss. Take a look at the intraday action. The third quarter missed expectations for same-store sales, and the company cited a transition to Grubhub as its sole delivery service partner, which contributed to the drop. And Shake Shack executives cautioned that more volatility is ahead due to the Grubhub transition, but the company expects to see financial benefits in the coming quarters. Wall Street actually co-signed that sentiment, saying that its full year 2019 comparable sales forecast implies a fourth quarter decline, and it expects the Grubhub transition to impact at least, or to last rather, into the year 2020. Abigail?
I've got bonds on my mind because as we have stocks at record highs, we have bonds pulling back. These are 10-year note Treasury futures, so they're actually trading in the direction of bonds. We see a decline down 3 days in a row, down 1%, a pretty significant move. The most since early October, suggesting that the risk-on mood is in town once again. And if we put it together with the CFTC positioning on net positions, it's kind of interesting. As back in 2017, you see that the net longs were very strong. Then in 2018, the shorts trying to play the fact that bonds were selling off. But then, of course, there was the huge risk off. We see the longs coming back pretty strong here, Romaine. What's interesting during the recent sell-off, this is, of course, through last week, but some of these shorts that have been getting out over the last couple of weeks, missing the big 3-day sell-off that we're seeing, at least right now, for Haven bonds.